Hello again. So before we get into entry timing and finding actual entry signals, we have to introduce one more tool and one more indicator, and you can already see it here under the charts. It is the RSI. So let me get rid of this quickly. And if you want to add the RSI to your charts in TradingView, you just go here to indicators, and then here you can type RSI. And then here, relative strength index is what we are looking for. Just click it, then go to the X, and you can already see that it is here on your charts. You don't need to make any adjustments. We use the 14 period RSI, which is good enough for our purposes. And I will show you now how we use it in the momentum and in the swing reversal setup. So by now you should know that we always look for those fading momentum signs. We look for those head and shoulders where price goes from making higher highs to making lower highs. And also we look at the distance between individual swing highs and swing lows. And if we see that the swing highs and the swing lows are becoming smaller, then we know that the momentum is fading, that something is changing in the market and in the price structure. And the RSI helps us to identify such a behavior very objectively. And by the end of this video, you will see that you don't really necessarily need the RSI, but it can be a good tool to be a little bit more objective and to remove a little bit from the subjectivity from the trading. And especially when it goes to live trading decisions, it can become very hectic and emotions enter the game. So having an indicator can be good at times when you can just check your indicator, see if you have a signal or not, and then make your trading decision. So in the RSI, we look for what we call, or what are called, divergences. And a divergence is a signal, and it shows that the indicator and price is not doing the same thing. So basically the RSI is a momentum indicator, and it analyzes trend strength and trend momentum. And if you see that the RSI is going higher, it is close to this 70 area here, which is the upper boundary, then it shows a strong trend. So you can see here price was at the higher end and we had a very good trend here. And here during this downtrend, the RSI was moving to the lower end, which is the 30, and it shows a strong downtrend. So that's a first criteria, that we look for reversals where the RSI is close to the outer end of those boundaries, because the stronger the trend, then usually the better the chances for a reversal are if, and that's a big if we have the signs of fading momentum and our other criteria. So let's look at a divergence here, and you can see already that price here was maybe making a double top or a little bit of a higher high. It is definitely not much, but price is at least staying at the same level. And what is the indicator doing? You can see this is the first high, which coincides with this, and the second high of the price action falls here. So let us just connect those highs, and you can see that the indicator is showing you lower highs, but price action is showing higher highs or a double top. And this means that the indicator and price action is not agreeing. Obviously, when you look at price alone, you can see that whereas we have been able to make higher highs during this trend, and then suddenly we stopped to make a higher high and we turned lower. You could have read this from price action alone, but as I said, an indicator is a good way to get a little bit more objectivity. And then after this divergence has formed, we had this break of the 20 SMA, which we will explore in the next video and in the next lesson, because that's then the actual entry trigger here, and then price sold off. We can just scroll forward, and then we already see the next divergence. You can see here price made a lower low and a lower low, and then here we either made a double bottom or a squeeze pattern, which is more of an advanced setup in the next module. But let's just look at the indicator for now, and we can see here is the first low, this is the second one here. So you can see we already have some type of a little divergence, and then here as well the next low and the next low. So you can see we have two divergences. That's a double divergence, which is a strong signal and is showing that price was already fading here. But just look at price alone, you can see a very strong trend leg here, another very strong trend leg, and then here on the bottom, price was just rounding off and the indicator was confirming that. Let's look at another example, very similar. You can see we've been in a very strong downtrend, 1, 2 or 3 trend legs, trend waves, depending on if you want to see it as 2 or 1 trend leg, and then we rounded off, we moved higher. Also we have some type of head and shoulders, left shoulder, head, right shoulder, and let's just take a look at the moving average, what it has been doing here. And this is not necessarily a divergence but a convergence, and this means that the indicator is agreeing with price action. And you can see that previously and first here, let's also make this one so it becomes clearer. So here at this part, the indicator was making a lower low and price action was making also a lower low. So the indicator was showing that we were in a solid downtrend, but then here we rounded off, we just moved sideways, and then price started to move higher with a lower high and with a lower low, and the indicator was confirming that. So the indicator was already showing that we were in an uptrend and we are definitely not in a downtrend anymore. The downtrend structure was broken. We broke above this 20 SMA, we came back into it, we retested it. In the next video we will learn that this is a very strong entry signal then, and then we rallied off of this RSI signal. So as you can see, we don't really necessarily always need a divergence. If we can see that price has turned and the indicator is confirming that, that is also a very important signal. Let's look at 2 more examples, and I think by then it should be clear how we use the RSI. And so you can see here that there is a massive double divergence again. So you can see here price has been in a nice downtrend structure, very clear trend waves. Here we had a little bit of a deeper pullback, but we were always making lower lows here throughout all this trend and this market structure. So this is important to see. We have been making lower low, lower low, lower low, and then finally another lower low. And let's look at the RSI, what it has been doing. So first of all, the RSI was confirming price action. It was showing that we were in a downtrend here. It made a lower low. Then here suddenly we started to make a higher low. So this one here was the first divergence here. You can see we barely broke above this 20 SMA. In the next video we will see that this does not qualify as an entry signal when we look at the 20 SMA entry rule. And so we can look forward, and just let me move that a bit. So when we look at the RSI, then here we have a very slight divergence now again. So we had a double divergence, and then we suddenly again broke above the 20 SMA. This time we did not only break above it, we retested it with this wick and we stayed above it. So this time it looked very different, and now we also have this trend structure then afterwards. So you can see how we can use the price action to understand what the indicator is showing us, and then we can put it all in context together with the 20 SMA rule, the break of the SMA rule, looking at the lows, how they shape up, and then time the entries. And let's look at a last example here together. So you can see this very strong downtrend again. Let's just mark the lows, and they have actually started here. So we were in this massive downtrend. We had lower lows all the way. We never had any higher low. Still we are making lower lows, another lower low, and then here suddenly at the bottom we made something like a double bottom, and then price turned around. And let's just take a look at the indicator. So you can see already that here we are having a divergence. The first divergence here, price was making lower lows, the indicator was making a higher low, And so the indicator is not overruling price action necessarily. If you can see that we are making lower lows, at the same time we never made a higher high. So you can see here price, although price was breaking above the 20 SMA with a very strong candle, we never made a higher high. We immediately dipped back below the 20 SMA and continued our way. And then here at the bottom we had another divergence here, this time with this double bottom here. So the indicator was again showing that there was something changing in the price dynamics. And so even then afterwards here we had a higher high, a higher low, and also we now made a higher high. So you can see how we can put this together. At this point it could have tricked us into a trade that didn't work out, and that is totally fine. We can't nail all the reversals, and it is important to understand that you don't have a 100% win rate, but by combining the clues we can get into very good trades overall. And you can see that as long the price structure is actually showing that we are going down, we should stay out of this market until here we have this double bottom with the divergence. Then we are making a higher high, we are making a higher low, and then we are reversing to the upside. So again, entering a little bit late with additional information here on the higher low and the higher high can be important, can improve the quality and the win rate of your trades. And so the RSI is a good tool. As you can see, we don't necessarily need it because we can get most information from the price charts, but it's a good indicator to have for the way we trade. And now we are ready to go. In the next video we will explore entry points, how to use the 20 SMA to find good entry points, and then we conclude this lesson with 2 or 3 more videos about how to get into the trades with very exact trading signals and entry criteria. Thank you for watching.